Hey, welcome to the Closing Beat, everybody. Happy Wednesday to you. How's it going out there? If I sound a little bit silly, it's because not feeling 100%. I feel fine. I just sound funny and working through that. So apologies there if I cough or make funny noises or whatever. But welcome to our show. We are financial advisors here at Jazz Wealth. Financial advisors for people who don't think they can have financial advisors. And we have a new advisor on staff here who has an unlimited amount of experience in the insurance world. We do not sell insurance. We will not be selling insurance. We are fiduciary advisors. However, if you are one of our clients and you want to know about that annuity product that you got, that insurance product that you got, and you're like, I don't have a clue what's going on. Do I need it? Should I keep it? Should I get more of it? I don't know. Well, Chris here can dissect the living daylights out of that policy. So if you are a client, we're going to try something here. If you want to send over your statement as well as your annuitization illustration, he will take the time to go through the whole thing, then get with whoever your advisor is, me, Eric, Haley, whatever, and work through your existing plan with that product and tell you everything you ever wanted to know. Whether it's good, bad, indifferent, whatever it happens to be, he will be able to tell you the inner workings of all that. So we're going to try that. We may make a video or two out of it so that people can learn because, well, even I have not really much clue of what those things are made up of. So I'm looking forward to learning too. Anyways, if you are also one of our clients, you know we have the app now for your savings account, 5.25% for the Goldman Sachs high yield savings accounts. That is not Marcus. It is Goldman Sachs account there that they're giving to us. We don't charge for it. None of that stuff. There's no catch or anything like that. And now you can have an app for that if you would like it. Wine and Wealth last week was our March financial focus. This week, I think we're going to focus more on the whole conversion stuff. How's that work when it comes to your taxes? Because we're getting a lot of questions with that. We'll go over the nitty gritty details and make sure to cover that for you. Okay. I was out yesterday, but the inflation numbers technically came in a little bit higher. But the market went that way. What's going on? Remember, if inflation came in higher, the concept, the thought would be that the Fed could hold rates higher longer. They wouldn't have to be in such a rush to cut. I will go back to the reality of what the Fed does is they don't cut rates until they need to or are responding to something. The Fed will not cut rates just because. They're not going to say, we're close enough and, you know, this was our target, so we must be able to lower rates. No, it's not going to happen that way. So yesterday, the stock market goes up to new record highs. And, you know, the concept must have been there that, you know, I guess at least the Fed's not raising rates anymore. You know, that I don't know. That's the best we can attach to it. Today, we at least touched a new record high, but we didn't close at new record highs. Oh, no. Is something wrong? No. Nothing's wrong. It's just the nature of the day. The S&P this year, by the way, fun fact, the S&P this year has had at least one record close every single week there. It's had 18 record closes now for the year, not necessarily because there's 18 weeks, but we've had some multiple ones in these years there. And so, yeah, it's good. There's no problem. We have an off day where nothing really happens. It's kind of quiet. We really struggled in the world of the, the big name stocks there. As you look around, like NVIDIA, which, by the way, we're going to talk about this in a second. NVIDIA is the only way the stock market falls at this point. That's just my belief. I don't share my opinion often there, but I'm going to say that the stock market does not fall until NVIDIA starts taking a break. That's it. I mean, that's clearly what everybody's looking at. That's all anybody cares about. We did the whole AI stats thing. We shared all that with you. When people look up AI stocks, inevitably they land at NVIDIA, right? Maybe SMCI nowadays since they're getting added to the S&P. But so that's that. Now, the rest of the market, besides really, yesterday, the rest of the market is participating. So it's not just the top 7, top 10 stocks that are lifting everything. There's moments in time where we can make that argument, yesterday. But all in all, most stocks are moving higher there. The majority of stocks are above their 50-day moving average. They're trending higher. They're recovering off of lows, those that were weaker there. But what does that mean? Does that mean that we continue moving higher, or does that mean we are headed for a pullback? Well, it's tricky, right? But we can look back at some of the things that we've used in the past that have worked perfectly, right? We track the number of stocks in the S&P that are considered overbought. We track the number of stocks in the S&P that are considered oversold. We put them on a chart, reference them in a percentage basis. In other words, before today, 57% of all stocks in the S&P 500 were considered overbought. Is that a high number? Is that a low number? I don't know. We got to use history to determine if that's high or low. We had about 7% of the stocks in the S&P were oversold. So a lot of stocks are either neutral or overbought at the moment. Well, we know that the stock market does not like to have more than 60% of the stocks in the S&P overbought. So I drew that line there for you to show, we're getting back to that point. What happened the last time we got up there? The market pulled back. What happened the time before that when we got up there? The market pulled back. What happened the time before that? The 5 times before that last time that I just mentioned, every single time the stock market pulled back. Was it a problem? Was that the end of the rally? Was the bull market over? Right? No, none of that. No, just a healthy pullback. People taking profits, short-term people enjoying their ride. Hedge funds looking to lock in a good quarter, right? Things like that were happening. So I want to point that out because when NVIDIA eventually pulls back, sure, the S&P, I'm assuming the rest of the stocks will pull back as well a little bit, but that will create a pullback in here. It's okay. There's nothing wrong with that there. So anyways, that's the S&P. If we look at the NASDAQ here, same thing, a bit of an uneventful day. It was really difficult to get the NASDAQ to get going because, well, the top 7 stocks that participate there were not participating today, right? It's pretty straightforward. If you look at the Dow, same thing, hit a new record high, just wasn't able to really give you anything interesting throughout the day. And I suspect that will probably continue until we get more news later in the week. Looking around, you got gold. Gold pulled back here really quickly, really sharply today. Nice little attempt at a rally. Very tough to want to buy gold. The GLD, I pointed this out in the notes from Jazz. The GLD is officially as overbought as it has ever been. That ETF, which is just a way for you to play gold without buying gold physically technically you're buying gold physically. But you have options, right? You could buy gold mining stocks. You could buy GLD, which is the most popular gold proxy type ETF. You could buy gold futures, things like that. Anyways, the GLD found itself as overbought in this little short-term move here, right? As it's ever been. We'll call it a 5 sigma move if you want to be really dorky about it. I try to keep that stuff away from you so I don't scare you. The Russell 2000 in a somewhat tighter uptrend here, hanging on to everything. It's sloppier, but that's normal. The Russell 2000 is known. Look back over all this stuff, right? Trends are not very clean and consistent. You don't usually get a string of many up days in a row, like an NVIDIA or a GLD, right? The Russell 2000 is a whole different animal, and that's because the majority of the Russell 2000 is not all allocated to one stock, right? It's more spread out. So that does happen there as well. Bonds, there you go. Pulling back a little bit. What did we talk about on Monday? Hey, it's the top of the downtrend. That's okay, right? We have this technical pattern that people believe in. They love it. They love to respond at these areas. They use them as locations of maybe I'm paying too much or I'm getting a discount. So we reached the top of this downtrend. I drew the lines for you on Monday. Ever since then, we've been pulling back. That makes perfect sense. The key there is if we can, if we can get a rally from here, I don't know why there would be one, but if we could get a rally from here that breaks above those highs, those technical bond traders, they're going to look at that as a sign of the all clear to run back to this level here, which would be awesome. That would bring our rates down a little bit. So I'm not going to complain if that happens. Crude oil, a hot mess if you ask me inside of here, but trending higher, just not in any way that, could get you excited. Let's move on and talk about NVIDIA for a second. Are you buying NVIDIA? Why? Should you? I don't know. Let's talk about this. Currently, give or take just an ever so slight amount here, because it did move around a little bit today. NVIDIA is trading, we're going to talk fundamentals for a second, at a 77 multiple. In other words, the price to earnings multiple is about 77 times. And the price to earnings multiple, it doesn't have to be crazy. There's all kinds of really cool things you can do with this, but basically we're saying what is the price of the stock relative to the dollars in earnings that they will make, and in this case I'm going to say per year, okay? So the price of the stock is 77 times the earnings that they will make. Now normally what you would do is you go, okay, is that a fair value for that? Is that normal for it to trade so rich, as you would say? Well, think of it this way. Investors right now are willing to pay $77 per share for every $1 in earnings that the company makes. And I don't know if you saw their earnings, but year over year, earnings are up about 600%, right? So we're willing to pay more right now. Okay, great. That means we're willing to pay $144 for every $2 in earnings, right? We have $11.94 of earnings. That's why you have such a high stock price, right? Because they don't have $1 in earnings. They have almost $12 in earnings. Okay. Now, most investors aren't investing for what today is. I would say the majority, if not every one of you, is not buying a stock for the value of it today. You believe that the value will increase at some point. Their sales will get better. They will add new products. They will hire new people. They'll expand their production, whatever. So you're paying for the future. And so a lot of people don't use the current PE ratio. We use a forward PE ratio. So in other words, we're saying, how much am I willing to pay for the earnings that I expect you to make in a year? Now that's more fair, I think. The trouble here with NVIDIA is that investors are only willing to pay, and this is still high, $31 per share per dollar of earnings next year. Is their earnings expected to grow? Yeah, I mean, that you could probably guess that, right? The earnings just came out. Yes, they expect their earnings to grow, but are they expecting them to grow 600%? That's the growth year over year so far. Is it going to happen again? 600% growth? No, even the company themselves, their own numbers don't show 600% growth. Their own numbers show about an 18% growth in earnings. That takes us from 1194 to 1409. So the forward earning, or the forward price of the stock, represents earnings growth that is way lower than what they're doing now. If that confused you, think of it this way. They are not going to grow at the same pace, by their own words, not just my words, by their own words. So therefore, is the stock price worth that much, or this much, then? No, it's not. We just don't have the official news that their earnings are only going to have grown by 18%. If their earnings don't grow by more than 18%, the current stock price is not the price that it will be in 1 year from now. Is that weird? Too much? I'm trying to tell you that this is a really, really favorable price for NVIDIA, and people are paying as if their earnings are going to continue to be triple digits. Do you want to be the owner of a stock when that does not come true? And like I said, at the moment, you just have the company's word to go by, which who knows better than the company? They see the numbers, right? Okay, I probably messed something up in there. Sorry if I confused you. I just wanted to go over that because I was like, this is madness, people, madness. Also, okay, I'm going to throw one other thing in here. This is totally off the cuff. This is not pre-planned at all. This thing, SMCI. You chasing this thing? Okay, so they're getting added into the S&P. They go from being worth like $5 billion to 60-something billion dollars, like, or 80 or whatever. Good for them, right? It's good stuff. They're getting added in the S&P, okay? 60% of the time, a stock is higher prior to being added to the S&P. After being added to the S&P, 38% of the time, the stock is higher. Your odds just went way down. So if you're buying SMCI with the mindset of it's going to get added to the S&P, that means it's going to do well, statistically, that's not accurate. The best example I have for you of a stock that had such a magnificent run prior to getting added to the S&P was Penn National Gaming. Let's see if I can go back far enough. No, we're going to have to go back further. Give me a second. Do you remember this? I want to do a custom thing here, add a time frame. So I want to go back, let's go 5 years just to show it here. This is what I want. All right, remember when this was all the rage? They were, oh my God, these guys are going to kill it. Let's go back and see. Okay, can you guess? Well, let me go back far enough here. Go back. This is all the excitement going back here. Oh man, this is awesome. We're going through COVID. We've got something to be excited about. Gaming, we're going to bet on sports gaming. It's going to be fun. Oh, wait a minute. It's doing really well. It's going to get added to the S&P. Oh my gosh, it keeps doing well. It keeps doing, you remember, you were here. You saw all that. Right here. One more. Yep, there we go. Right there is where it got added to the S&P. Yeah, I don't want to be a part of that. right? That is the last known, the most current stock that we know of that had such an amazing run before getting added to the S&P. And what happened afterwards? The excitement bled off. I'm not saying SMCI is the same by any means. Please, I know they're different companies and everything. I'm just saying there's a lot of excitement that gets built into getting added to the S&P. They're on the verge of getting removed from the S&P. It might be the fastest that a company's ever been added and removed. It's not going to be the fastest, but it might be one of the fastest. So anyways, that was a total side topic there. Okay, stocks in the news here. Archer Daniels. Hey, this is kind of cool, right? You know what? We're going to buy back about $1 billion worth of stock. That's a nothing amount of money for them. That's less than 3% of the entire value of the company. What did it do for the stock, though? They're no dummies. Everything we've been talking about. Say you're going to buy back shares, or say you're going to raise your dividend, and you get a higher stock price, which, you know, they needed there for a moment. The government's canceled the chip contract there with Intel. I didn't see if they were going a different direction or if it was just temporarily canceled with them. I do not know. All right, you got Petco. They're trying, right? Earnings came in better than expected. Guidance was the weak spot here. The real weak spot is a company that does what, $6 billion in sales, but then loses all of that plus an additional $1.2 billion. Okay, that's a negative 20% profit margin. That's trouble. Remember when Amazon was doing this, they had money to expand. No, they don't. This is not the same as Amazon there. So unfortunately, a little bit of rough news continues for them. Dollar Tree also was probably one of the bigger movers you caught today. Dollar Tree had earnings that missed expectations there. And I think what really probably drove the point home here for the resetting of the stock price is that they're in downsizing mode, right? We don't want to see that. We want to see you in returning cash to shareholder mode. That's the cycle, or where we're at in the cycle of the economy, okay? So they're closing 600 stores basically throughout the rest of this year. They're going to close 400 more over the next few years as the leases run out. That was their actual wording there. And what was really cool is I see all these social media posts about shrinkflation. Right? The bag of chips is slightly smaller, but it's the same amount, if not more money. The can of soda is slightly smaller, but it actually costs more than the larger can of soda that we used to have. Yeah, shrinkflation. Right? It's just what the kids call it. They actually said shrinkflation is hurting them, but the shipping rates that they're paying to get these little products to their stores was helping them. So they tried to offset it there. Sadly, the numbers never lie, right? So to follow up with that, tomorrow you have Dollar General reporting, competitor. And then other retailers, you'll have Dick's Sporting Goods, Ulta Salons, and then after hours, you'll have Adobe. And, Adobe will be after hours. That'll be tomorrow. Stats on Adobe are not the greatest. They do beat 90% of the time on earnings, just the stock reaction on earnings. If you look back through the history there, you've got 5 of the last 8 earnings reports. The stock's actually moved lower on that. So it's a tough one to try to guess if you're a trader, I guess, but not really what we cater to here. So that is it. If you have any questions, I will take your questions along the way here. If you're brand new to investing and you're not sure where to start, you want to check out Haley's channel. Haley has a great channel here on YouTube where she's going over the basics of investing, all the terminology, how everything works, in really short little snippets there geared towards the younger crowd. And the younger crowd, of course, likes things in short snippets, which they're going to have a hard time if they don't get themselves some TikTok, right? Remember, it's not banning TikTok. Like, there will be a TikTok. So if you're one of those people, easy. It'll be fine. Do we need to do a leaderboard here?
We actually don't have a leaderboard. Wow, I'm so little. But we have our winner. We actually didn't get to the winner on Monday. You don't have my audio on.
Yeah, you're good. Go ahead.
Oh, okay. Then Silky. First time winner this year. But if you remember, Mark and Silk last year, they were dusting the competition. So we hadn't seen them in a while. Still here. Congrats to her on winning, and congrats to them.
And you might remember me correcting you numerous times. It's Silk.
It's Silky. There's an E at the end.
Yeah, no, it's Silk.
Yeah, but I think there's an E. So
Okay.
Silk is SILK. It's just a K. It ends right there.
Is it timey?
In that case, no.
Only in that case.
Yeah, exactly.
Okay. I'll think of another word here in a second.
Okay.
No, it's not. It's not the case. Anyways, congratulations to Silk. Welcome back to the winner's circle, right? Dim says, I think it might be a good time to slow down the speed of the accounts at Jazz. How do you know we haven't already done it? How do you know? I do agree with you, though. I do agree with you. Saw a reversal in 3M today. Yeah. So today, big time reversal there. Yeah. And they call that a gap fill, right? So people believe this is actually a statistical truth, by the way. I don't know how you set out to make it a trading strategy. But the concept there is that when a stock has a large gap up or down, it will always come back and fill that hole or gap in price. And so here we go. We're filling almost that hole in price. What I don't know is like, okay, here's one. Do we eventually come back? So how do I know what to do? But statistically, if you look back at the number of times a stock gaps, does it then go close above its prior close at some point? Yeah, I mean, it does. It's a weird phenomenon. I just don't know what you do with it. Yeah, divergence between gold and gold miners is crazy. Yep, I would agree with that one. Tom says, opinion on selling puts on Tesla and Boeing overextended. Old seem to be collect some premium there. The premium in Tesla for sure. I'm not telling you to do it. I'm just saying the increased premium is definitely there. More juice in those options. Not sure how I feel about Boeing at this point. We mentioned Apple last week. I would still stand by that one because that's quite a pullback. Boeing, I don't like the known news events. I don't like the possibility of large moves there to the downside, throw you in the money or something real quick. So that one kind of bugs me, but that's just me being conservative. Could you do it? And is the premium obviously juiced up right here? Absolutely. Yeah, certainly is. Any news on why Halliburton dropped midday and the other refiners kept going? I am sans news feed right now. Right? I am. Well, I could try it this way. Yeah, I'm not getting it. Yeah, that's not your fault. That's on my side here. So I don't know, and I didn't look at it when that happened there. Yeah. Doc, here's a question. Does a dividend pay date cause a stock to move? For instance, 3M was yesterday and probably today. No, the pay date doesn't do anything. The ex-dividend date is what you're looking at. The ex-dividend date, yes, the stock price will adjust lower by the amount of the dividend. Only on the open, though. So this is tricky because it could be, let's say, for example, today was 3M's ex-dividend date, and I don't believe that to be true, but let's just go X. I want to show you if I can see it there. Okay, so cool. This was last one was February 15th. It's gonna be hard to see. Let's try it. So I'm gonna zoom in here. We're gonna go to February 15th, their last ex-dividend date. Their dividend was 604 50 cents. Okay. Oh, it's right down here. It tells me. Okay. So we'll go to February 15th. The closing price on February 14th, come on, yeah. Closing price was $92.42. All right. The next day, the opening price, $91.50. See the adjustment there? So about the dividend amount adjustment. Now, it's not perfect because what if the stock was already getting some buying pressure in the morning? So the very first tick of the pre-market action would have showed it down $1.51. But as an owner of 3M, you wouldn't care because you just had $1.51 replaced into your cash balance, right? You could reinvest it if you want. And therefore, if you reinvested it in 3M at that price, it's a wash. Everything was the same. So it's a long way of saying it's the ex-dividend date, not the pay date. Now, because it says the 15th there, Let me see if I can quickly find their mark. No, that's quarterly. So that's it. So it's not anything dividend related there. The pay date was on 3/12, which was yesterday. And that doesn't actually adjust the price of the stock. Not by any other. I mean, it could be some other reason, but definitely not that. Yep. And Doc says, DRIP. Well, DRIP is the reinvestment. You're saying, okay, they got the $1.51 on the pay date. Do they reinvest it? I guess so. That's a possibility. Mint Mobile commercial? Hey, right. I like it. Plantair, saw them making the news a little bit there. I'll stay away from comments there, but from a stock perspective, there you go. So from a stock perspective, what do you got? Earnings, excitement. We don't chase that, right? Now you have calming down. You get a chance to dissect everything. Okay, maybe inside of here, something you're interested in, but I'm not one that would be interested in adding or chasing anything at this point. So not for me. Maybe the chips are showing a correction is about to happen. They have been lagging. Yeah. And that's fine. Profit taking is good. Like I see the emails coming in. Like, is it over? Is AI over? No. It's just the hype. Was pot stocks over? Well, those were kind of over. Everything in this world, we have these little hypes. When this is over, there's going to be another one. It doesn't mean anything happened to it. 3D printers, they're still out there doing their 3D printing thing, just at fair valuations, not those rocket ship values that we were talking about many, many years ago. Right? Okay. Cool. I'm going to wrap it up there and probably go to sleep. You guys enjoy the rest of your day. Thanks for hanging out with me. Oh, do we have Eric's thing? Okay, so we're campaigning for clients, right? Give us a call. You can schedule a call, whatever you like. If you want to work with us, you can see everything you want to know on our homepage. This is my campaign commercial for why I think you should work with us. Eric has his rebuttal, which I got a chance to see today. It's really good. And here you go.
The financial world needs somebody they can trust, and also somebody who is professional.
If you have a snowball in your left hand and one in your right hand, what do you have? Frosty's full attention.
Eric Powell is not professional. Eric Powell is a radical political insider, despite saying that he isn't. He also definitely has ties to the Illuminati. He's on the record being a radical West Coast elite.
So I actually lived in Los Angeles for nearly 2 years.
Let's hear that again.
I lived in Los Angeles for nearly 2 years.
Unprofessional, political insider, West Coast radical elite. Dustin Tibbetts is the Southern gentleman you need and a man of the people. Justin Tibbetts, a man that would never cross the line with a joke, and more importantly, always money first.
I'm Eric Powell, and I approve this message.